Good morning, Keller Williams, and welcome back to 66 Conversations with MAPS Coaches. Today, I am honored to be joined by one of my favorite MAPS coaches, just happens to be in my region and one of our big, well-known MAPS Coaches group program, individual program, Steve Schlueter. Steve, thanks for being here today. For those that don't know who you are, both people left in this world that don't know who you are, why don't you introduce yourself to everyone, and then we'll talk about the conversation you're prepared to handle today.
Yeah, Marty, as you said, MAPS coach, bold coach, have a group program, Never Ending Referrals, have the privilege of being an owner in two market centers in the Austin area, Round Rock and Georgetown, and have the privilege of leading the productivity team in the 900 agent market center here in San Antonio City View. So a lot of fun stuff I get to dabble in, Marty.
And Never Ending Referrals was the first group program I ever took as an agent. I can remember you teaching that a few years back, might be even more than a few years back, but neither of us will date ourselves. So that's all right. We'll just
there you go. We're on ideation number 4. So we keep going, brother.
I love it. I love it.
Yeah.
Steve, I think the objection that we're starting to hear a lot from buyer clients in today's market is, hey, the market is starting to crash, or at least it's going downward. And so therefore we're going to wait. No point in writing an offer today when the house might be for sale for cheaper tomorrow, right? And we can't get them off the fence because they just want to wait. Mm-hmm. How are you handling that conversation with your clients and with your clients as well?
Well, let's go to something Gary's been talking about, Marty, and he's been talking about MOFIRs, right? Making offers for immediate response. You may never get to have the conversation with the person that's in that mindset if you're not putting out a MOFIR that gets them into a conversation of possibilities. So let's think about this right now. I'm going to share some things on the screen in a few moments about things that might validate a strong MOFIR that I would put out. A MOFIR such as, hey, best time to buy real estate in San Antonio, Texas in 4 years. And call me for a free strategy session. Don't miss this opportunity window that will close fast.
I like it.
That's a MOFIR. Now, if I'm going to have a consultation session, there's got to be something behind that backs it up. And by the way, it's got to be real because people have BS detectors, right? Believability scale, right?
That's where we were going with that. Yes.
There you go. You thought I was being naughty, guys. And yet, let me share some slides with you. So you came in the office, I came to your home, we're having a strategy session to see if this might be the right time for you to buy. And your thoughts or reasonings maybe behind not buying are, as you said, I'm afraid the market might come down. Sure. Or, interest rates are high and just it feels a little risky to get in the market. And so I'm going to educate you. And so let me pull these slides up here real quick, Marty, and we'll take a peek. And by the way, I'm going to suggest that you be one bad MOFIR, man. You've got to work on your MOFIRizing. You got to work on your language. I like it because it sounds naughty, but it's not, so there you go. Where am I going here? I'm not sure. But anyway, so here's something that I might share with you about our housing market. So if you're concerned things might go down because of a recession, well, let's see what happened during the Great Recession in San Antonio. And if you look at what happened in the Great Recession in San Antonio, here we are at 2008. We went from 207,000 average sales price to 201. And then we jumped back to 210 and we were kind of flat, 210, 211, then 223, 247, 267. And yet look what's happened in San Antonio, Texas, in terms of the volume of homes that are selling. People are being attracted to San Antonio, and this has really continued to carry prices up. So this would be the first thing I'd say. Let's see what happened in the worst recession that we've experienced in modern times. And we'd go and I'll go, how do you feel now about what the economy might have an impact on our San Antonio market? It would seem negligible. Would you agree? And then Gary, of course, always provides us with great resources when we go to mega camp, when we go to family reunion. And I love this slide, Marty, because it shows that long-term trend and the impact on real estate. Now, you notice the broader market, it had a pretty big dip during the Great Recession,
sure,
compared to San Antonio. And yet the broader market nationally has caught up, and you could do this for your own market. And here's the interesting thing. It's projected 385 for the end of this year. The 4% trend line, which is this gold line, is 343. The conversation I might have with you, Marty, is now you realize that the difference between 343 and 385 is 11%. So my question is, at 4% average long-term trend, how long would it take, even if we were 11% above the trend right now, for you to be back to even? They do the math, a little less than 3 years. How long you plan to be in the home? Okay, great. So you're going to be there 8 years. And let's talk about why this still might be the opportunity, even though you might take a little risk being a little above market right now. If this was my market, I'm just going to acknowledge it so we can have a conversation around it.
Sure.
And I might suggest that, you see, the great thing about the long-term trend with real estate, it tends over the long term to always go where?
Up.
It tends to go up, right, Marty? And so I would continue. Now, I heard your concerns, Marty, about interest rates. And, here's what I want you to know. Right now we can get low fives with a little seller concessions. It's been bouncing between 4.9 and 5.5. And what I want you to know, we ended 21 with an average of right at 3%. And yet when we go back to 1990, Marty, actual average interest rates are right at 6%, 5.97. So what that really means, Marty, is today's rates are still below the norm. We just kind of got addicted to cheap money post-recession.
Sure.
And because inflation was under control, monetary policy politically, it was nice to keep it really low, and they did. Marty, when you look at the long term, and when you think about the long term being almost 8% as an average, is it possible we'll never see the threes again in our lifetimes?
I think it was a really interesting point Jay made while we were at Mega Camp. We hope not. We got to those low, the high twos, low threes, because we were in the middle of a national pandemic, right?
That's right.
God forbid we ever get back to that point.
Yeah,
So we have to have short-term memories.
That's
when
right.
it comes to annual mortgage rates, because we ideally never get back to that point again.
So this whole this buzz line we've heard of, marry the house, date the rate. Well, what we got to really decide is a good time to buy a house. And if it is, then date the rate. If the rate does come down, the wonderful thing is you'll get to refinance.
Sure.
And what we need to discover for you is it the right time to buy a house. And of course, there's more data on interest rates. And let me share with you why right now it's our position here in San Antonio, Texas, that we are absolutely in the best of times to buy a home. We know interest rates were cheaper, and yet, the best time to plant a tree was 20 years ago. The second best time is today.
Right.
And after the Great Recession, you notice we've had a lot of talk about housing shortage. And the reason that occurred is, well, the desired amount of housing being built each year is 1 million housing units. And post-recession, you can see what happened. We were low as 400,000 for 3 years, and then slowly started to creep our way up. We didn't get back above 1 million until last year. Mm-hmm. So we have like a 3 million nationally, a 3 million unit housing deficit that we're not making up. And Marty, let me ask you right now, with all the fears of the economy, are builders speeding up production right now, or are they slowing down production?
They're slowing down. We're gonna be back under that million mark, most likely by the time 2022 is done, my guess, or pretty close to.
Yeah, so we're not making up the deficit. So what that really means to you as a buyer, is we're going to be in an extended period of time where this housing shortage is around. We're going to be dealing with this. And in fact, to back that up a little bit more, let me share with you this little stat right here, that it shows what housing permits were during the peak, 2002 to 2008, in these major metropolitan cities. Now you see San Antonio in we are 25 in the we are 25% behind where we were at that time. And the demand is higher than it's ever been in San Antonio. When we looked at those units and the amount of homes that we're selling, and we're way behind what was ordinary times in terms of building permits in San Antonio. Now, Dallas and Austin have started to get into the green, and these places where people are moving from, why do they have a housing shortage? Because they're not building significantly at all. And so we've got a really interesting economic force at play around supply and demand. Is there's just not enough supply. And we see what that's been doing to impact the car market and many other things that we consume every day. Here's an article in San Antonio Business Journal, was last month, that says San Antonio needs 65,000 more homes to have a healthy housing market. So I guess, Marty, if you were the buyer at this point, I'm going to ask you, when you think about the shortage of supply right now, and the number of people that are desiring to move to Texas, do you feel like there's more downward pressure over the next 36 months on home prices, or probably more upward pressure?
Absolutely. Yeah. And even if it's flat, which I do think it's going to be upward, but even if it's flat, you've still made a good investment because you're paying down your note, you're using it as a tax write-off. There's all the other benefits that I'm sure you would also launch into. But yeah, based upon everything you're showing, there aren't any trends that show my house is going to be worth less next year than it is today, based upon all of those stats and graphs. And I love how analytical you get, Steve, because it's sometimes people need to hear it, not necessarily understand it. Sometimes people need to see it and they won't necessarily understand it. But when you put it all together and you show them those trend lines and those articles and those graphs and charts, it really does kind of ease that worry of, oh, my house is going to be worth less next year because we're going into a crash, right?
I pull it right back to here. And then we're behind starts, and we have more unit demand than ever before.
Absolutely.
The number of homes that are selling. And then, you look at why this is happening at such an exaggerated rate in Texas, is we're one of only 4 states that has gotten to pre-pandemic levels of employment.
Yeah.
And that is predicted to continue. And so here's some possible MOFIRs. You could think about, what are the real opportunities for sellers? What are the real opportunities for buyers? I think it's the sincere chance for both sellers and buyers, Marty, to get their forever home. Yep. How many sellers were afraid to get in the market because they didn't feel like they had a place to go?
Right.
And so we're fortunate that we've gone from 1 month of inventory to 2.3 months of inventory, and that's still low. And yet you've got the best chance you're going to have in a while. So you got all these different MOFIRs we could go to. But that's what it would look like. And by the way, Marty, just for you guys out there in your market centers, we do something every week called Market Stats and MOFIRs, where we go through some of these stats and we pick one apart. In fact, Marty, I'll send you the link if you want to put it in for those guys for our most recent one.
Absolutely.
And they can check that out.
If you look in the YouTube description below, I'll have Steve's link for that Zoom class that he does periodically. And then you can also see it on the Facebook group. I appreciate you inviting him that. Guys, if you haven't heard and you haven't seen, sometimes it takes more than just a few catch lines and catchphrases to get someone off that fence, right? They really do have to be convinced that their house is not going to depreciate in a market that is a little topsy-turvy right now, and yet really identifying those actual trend lines. And Steve, if you go back and watch, he had the source for all of those data points. And so you can go in and say, where do I find this data for my market? Go look. It was a Bureau of Labor, right? It was the, all the different places where you can pull that information. Go pull your trend lines for your market. And Steve, I think you've done an amazing job of showing us how to ease that fear, overcome that objection, have that conversation, and have it from an intelligent point. So thank you very much. Any closing thoughts that you have that you would share with agents that are looking to put together
I would just say, we have a fiduciary responsibility. And that is, I can't promise you what's going to happen. My job is just to educate you and give you facts and interpret what that might mean for you to get in the market now, what it might mean if you wait too long. What I would tell you, what my concern would be if you wait too long, as soon as the market upticks, and you won't know that till after the fact,
Right.
because we've got this slowdown now in builder development, we're going to be right back in 1 month inventory levels or maybe less again, maybe as soon as 18 months from now. And maybe it's 24 months. I don't have the crystal ball. And yet everything says we're going to be back at that place. And this is the time to strike while you have options. So
education is never a bad thing, right?
You got it, brother.
Excellent job, sir. Thank you very much for your time. Definitely appreciate the education you've shared with us and the ones that the agents can share with their consumers as well. Guys, stay tuned. Tomorrow we'll have a new MAPS coach and a new conversation. As always, we appreciate you being here. We'll look forward to seeing you again real soon. Thanks again, Steve.
Thank you, Marty.